Okay, hi everyone. Thanks for joining the Alice webinar, Show Me the Money. We have some great guests here that I'll be introducing. We have Zaw Thet, who's the founding partner of Signia Venture Partners. His background in technology, specifically mobile, he's a veteran entrepreneur, and Signia has just like a great motto that we can't wait to talk to you about, and great to dig in with him. We have Shelley Kapoor Collins from the Shatter Fund. She also invests in tech and specifically in female-founded companies, so we're so excited to have her. And then Sarah Meester from Indiegogo, so the popular crowdfunding platform, and she's in tech and creative design and hardware, so she brings a lot of great knowledge as well. So their bios are also available online if you want to dig in, and the Twitter handles are here. We'll be live tweeting, so feel free to reach out to any of us. In the bottom of your screen, you'll see a Q&A button. So that's where we'll be sort of fielding all of the questions, and at about quarter of, we'll pause so that we make sure to address anything specific that you want to ask us. So thank you all for joining. All my panelists. I'm so excited. This is one of our second sort of webinar series, and we have to kick off with talking about the money because people always have questions, and this is obviously a popular Jerry Maguire phrase, show me the money. So I'm excited to kick off with all of you here. So just so that everybody on the phone knows, I'm going to ask everyone sort of a specific question. And then we're going to go around table and ask these questions that, we get from our Alice members, we've gotten from our accelerator. So if anything doesn't get addressed, definitely chime in for Q&A because we'll be excited to answer those. So Zaw, I'm going to kick off with you. Did some digging, and I really loved that this theme kind of tied in with the key questions that people have, which was like your approach at Signia Capital. So your portfolio, as I saw, was a mix of ad tech, fintech, health, SaaS, AI, and you're a mobile expert. But I loved the approach to investing was why now? Why you? Why us? And I thought it was good to sort of kick off and think about, what is the right time to raise capital from your perspective? And also from just your experience, what is that sort of secret sauce and what are you looking for in a founder?
Sure. Well, thanks everyone for having me. First of all, to Team Alice for putting this together. I think it's always the right time to raise capital, personally. I just think there are different checkpoints along the way where it becomes easier to raise capital. So it's never the wrong time necessarily. I think, taking a step back from a little bit of the Silicon Valley bubble that I've been in here now for 20 plus years, but at its base level, looking at investing in a company is different for the way every investor kind of evaluates investments. And so one of the reasons why you saw that on our website and we talk a lot about kind of our investment rubric is because that's the way that we choose to look at the world to invest. There's a lot of other great different ways to look at investing as well. But for us, we really think about things in kind of three orders. We think about team, number one. Is this a team that's worked together well? Is this a team that's entrepreneurial? Is this a team that, can really, we think, go on to build a big company? Can they scale with that company? Are they willing to learn? Are they willing to take feedback? Are they collaborative? So that's the team element. The second element for us is the market. And we're one of those investors that we look for big, disruptive, iconic companies that are going to be kind of have the potential to be $1 billion plus companies. And so we're looking for markets that aren't just big, but have real pain points associated with them. We're not looking for products that are just, in search of a solution or in search of a market. We're really looking for a market pain point first. And then actually third for us and last is really product. A lot of times we're funding people and teams when there is no product and it's just an idea or a set of slides or some talking points. And so product is actually kind of the last one for us. Obviously, the farther along you are in your company development, the more that we look at product. So that's that piece of it. And then lastly, I would say to your question around kind of the why now, why us, and why you, what we're looking for on the investment side is understanding what is it about the way the world works today that makes this an opportunity for you to build this company? Is there some new disruptive technology? Was there a new set of laws passed? Was there something about the way that people communicate that means that now is a good time to start this company? So that's kind of the why now. The why you is really about the entrepreneur. Why are you the person that, or set of people that is so passionate about doing this that you eat, sleep, and dream it all day long? And what is it about your background that makes you unique to do it? And then for us, and this is definitely not all investors, but for us, because we do a small number of investments, but we tend to put a lot of cash in, we really think about the why us in terms of how can we as Signia help you as the entrepreneur build your company, better what you're doing, and continue to coach you along the way. So that is the way we view the world.
I love that. And I love that probably went out on Twitter already, if I know Sandra, that there is never not a right time. It's always the right time to raise capital. I think, based on people's milestones, I think that's really good feedback. And then just being a disruptor and what you're passionate about. So thank you.
Absolutely.
So Shelley, I know that your fund exclusively focuses on, funding women and disruptive technology. And so I'd love to hear just kind of your perspective, for the women on the line and just, for our community, which is heavily women. Why is this mission so important to you? And, what advice do you have for female founders that may struggle to access capital, get those meetings, sort of be in those rooms with like potentially in Silicon Valley, like all males?
Yeah. Thank you for the question, and thanks so much for having me on today. I'm really excited to be here, and you're absolutely right. For me, it is a passion, it is the mission, and it is it's a calling to help women connect with the access to capital that they need to start and scale their companies. I believe that all entrepreneurs have to hustle. Right? I just think that female entrepreneurs have to hustle a little bit harder. And having said that, there is a lack of critical infrastructure that women need and they don't have access to. So for example, I started Shatter not just to invest money into female entrepreneurs, but to give them the whole, to give them an infrastructure, right? Access to capital, access to markets, and access to networks, which is absolutely vital for any entrepreneur to survive. And it's not so easy because those access to that network is elusive if you're not on the coasts or if you're not already inside a circle. And we want to break that, and we want to create a good old girls network for the girls. And so that's what we're working on.
I love that. That's a good quote too. The good old girls network. And obviously called the Shatter Fund. So that just makes a ton of sense because we know that a lot of great, ways to break down the boundaries for women. So Sarah, I'd love to kind of have you chime in now. I know that for people who aren't, familiar about Indiegogo and just crowdfunding and sort of where that fits into the I want money and I need access to money and I have an idea and sort of like those milestones and phases. Can you share with the audience just like a little bit of background and shed light on what kind of ideas have success on crowdfunding programs or platforms, I should say, and if there is sort of that sweet spot of timing?
Yeah, absolutely. So I think there is a sweet spot of timing, and usually it's just preparedness. Have they tested the product, the language with a group of people in kind of the build up to a campaign? One of the things that I think really sets Indiegogo apart from other platforms is how we focus on that pre-launch phase as much as possible, making sure the pricing is there, making sure that the prototype works, and making sure that you've built an audience in advance. I think one of the misconceptions of crowdfunding is anyone can just put something up on a crowdfunding platform and it's going to get funded and they'll figure it out later. That's something that we want to debunk. Like, it's about building that audience in advance, knowing the things that, the language that resonates with them, knowing the features in your product that they want and don't want, because why invest all this money and time and tears into developing a product that people aren't actually going to back? I work a lot with the design community, and actually I find that some of the products launching on our site, mainly like tech gadgets and like new innovations and technologies, like the design community is generally kind of concerned with all of the many features that some of these products have, and sometimes they actually end up favoring things that are a little bit more minimal. We just had the Light phone launch its second campaign. They've raised over $1.5 million, and it's them actually kind of taking the phone technology we have now and peeling the layers and kind of taking away some of the features. So I would say as a whole, you're ready to launch when you have a working prototype, when you have a sense of people's needs, when you know like that you're like 80% ready to manufacture, if not more. And those things are lined up and kind of all the costs and the math have been laid out.
I love that. And we'll kind of come back to that a little bit too, because I know people will want, sort of tips and to understand also, how you support people in that journey. So thank you. So kind of a question that I wanted to open up to all of you was really, there's obviously a number of different resources. We have representation of a couple of those resources right now or sources of capital right now on the phone, but there's angel, there's VC, there's crowdfunding, debt equity, as we kind of segment it that way. How does a founder particularly determine what aligns best with their business and stage of growth? Like how should they sort of, really consider what to chase in terms of the money?
I'm happy to start if you want. So, there are a lot of different options, and obviously Alice has a lot of different great resources for people to look at and understand what are the options in their community. I think you have to think about what kind of business you're building, right? Are you building a more of a lifestyle business? Are you building something that is product related? Are you building something that is more technology or software related? And I think different pools of capital are definitely, available for each of those. I think in any of those situations, obviously an angel kind of friends and family round is always a great place to start, because investors are looking to see that you have the dedication as well as the support of people that you're close to. And so that is always something that's helpful. The one thing that I'll add here is that I tend to find, and I know most VCs are generally like this, that our best deals come in through referrals. So it's very difficult to sort through all of the different, I'd call them cold calls that we get. There's, thousands upon thousands every week collectively as a team. And so that's a very difficult way to actually get through to someone, via, just a cold email on LinkedIn or sending them something else. So my recommendation is find people that can refer you, that know you, and that are trusted by those sources of capital.
I couldn't agree more. I think that the value of a warm introduction to a VC cannot be overstated. I mean, when we have deal flow that's coming in, and how do you sort the good deals from the ones that you want to pay? That might be good, but might be great. And because as a VC, your number one job is to find the home runs for your investors. And in order to do that, you're looking to your network to see that deal flow. So I agree with Zaw that is number one. Also, I think that what you said about the friends and family, having some skin in the game is really important. For us, we look for product market fit. So unless a company has achieved that product market fit, then they're too early for us. And so if that is the case, then we will refer them to another source or connect them with someone else who would be a good fit for them.
It's a luxury, I think, for me when I have someone who's like fully VC backed and wants to do a pre-sale campaign, because it means they're just a really buttoned up group. Not everyone is lucky enough to be in that position. So a lot of the people, the kind of the scrappier startups that I work with, have done a friends and family round, or they have been doing like the design circuit, or they've been doing startup competitions. They know the startup competitions state by state that they need to apply to. Alpha Lab Gear just had their hardware cup, and saw some really great hardware startups launch and get like up to $50,000 just from presenting there. So I guess I recommend people that are finding themselves in that scrappier stage, like subscribe to newsletters for these different startup competitions, and also start laying the foundation for the social media proof, like building an audience, building awareness for your product early, so that when you do find yourself in a stage where you have capital, you don't have delays set by needing that kind of social validation, to have the full scale MVP that I think a lot of other VCs are looking for. If that's not there, I think that's a giant gap for people. And it's often forgotten in those earlier stages where there's some really interesting content that you can be posting.
I love that. And, sort of after you get the meeting, when you're looking to raise money, what are just a few things, for instance, that you can share with founders about how to present the idea to get that investor buy-in? For example, key themes like how to market yourself, which you kind of touched upon, Sarah, and then what to include in your financial model. I know that's a really big one, and how to just demonstrate your traction so far. So love advice for people on the phone, like you got the meeting, you're in the room, how do you really sort of get that investor buy-in?
I mean, I'll start with saying one thing that the numbers matter. Absolutely. We look for large disruptive markets. Like, is technology being used to solve a critical issue in the market? I think female entrepreneurs are an emerging market as it is. And then on top of that, when you're looking to use technology in a market that is undercapitalized, then we are definitely interested. But beyond that, I think what we are really focused on, what my team and I do, I have two folks that are dedicated to due diligence and deal flow. And our number one thing is the team. We're looking to see how well do they gel? How long have they worked together? How well do they know each other? I've had people present companies to me and they've added a woman to the team so that we'll look at them and find out that the woman hasn't been there all along, and she just came in for the, for the aspect of pitching to us. And so be genuine, be authentic, because I firmly believe that who you are is what has to come through, and the only thing that scales is authenticity. So make sure that as a team you present yourself as best as you can, because that's number one for us.
Great advice. Sarah?
Yeah. I'm sorry, go ahead, Sarah.
No, you go ahead, but I do have something I want to say. So after you, then.
Okay. Yeah, I agree with Shelley. I think authenticity is very important. I don't think a deck is a bad thing because, or a set of slides is a bad thing, because I think it's an opportunity for you to show people your thesis and how you think about building this company. Always very important, I think, to frame the problem up front. And to talk about what it is that you're solving, and then to talk about kind of what the market is, the team, all of those things are there. Financials are a tricky thing in early stage. I probably go a little bit earlier sometimes than Shelley does. And so we know at that point that financials are kind of just made up, or they're based on a set of assumptions that are going to change pretty drastically over a set of time. But I think it's important to have it in there because I think what you're trying to show is that this business has the capability to grow at a fantastic rate, and to be a big business one day. You're not necessarily saying we're going to hit these exact numbers over the next 4 years. You don't need to have 10-year projections. And then lastly, just to circle back to first point is, I think it always pays to understand the room that you're in and the set of investors that you're talking to. So spend time on their website, spend time looking at their portfolio, understanding what type of things they've invested in, spend time looking if they're writing anything about, how they look at different markets, how they look at, a different investment criteria. And if you can match those up, with your presentation or when you're in the room, because I think like we love seeing it when someone actually comes in and has a why us, a why now, and a why you slide in there, because that means that they've really taken the time to understand the way that we apply our investment criteria and are helping us to get there with them on that journey.
Yeah, I want to kind of piggyback off of that and say, it's so much your company and often you, under that lens. I think you forget to think about like surrounding yourself and your company with really great people before you go in that room. I love when I find out a startup I'm working with has also worked with other startups I've worked with who have had successful campaigns, and that they have put them on like a board of mentors for the campaign. Like they have really thought strategically about their advisors in terms of like the network that will give them and the lessons that will like kind of inherently like, I don't know, fuel like their momentum in those early stages. So, I think it's not going to hurt you when you're presenting a deck to say maybe who we are. We're this great team, and we also have these like really great advisors lined up behind us who have gone on to do brilliant things. I know that for our backer community at Indiegogo, when they see like the Bat B&B guys had the Flow Hive team backing them up, and Adrian Grenier from Entourage, and Merlin Tuttle, this like leading environmentalist, that really resonated with those communities, and it absolutely gave them that extra leg up and the confidence to walk into rooms, and regardless which room they're walking into.
Can I add something there? And those
Yes.
are points, Sarah and Zaw. What I want to add is I think that just like an entrepreneur knows their customer profile, they also need to know their investor profile. Kind of going back to what Zaw was saying about know who you're talking to, know who's in the room. But let's take it a step even further and say, if you know your investor profile, I do believe in the concept of smart money, but then there's relevant money. There are certain investors that you want money from. Yes, you should pitch everyone, but maybe you should know exactly who you're pitching, what they're aligned with, and that alignment between investor and founder is really, really important.
I love that. I'm going to capture key themes here because I think there were just a few that I'd love to hone in on for the audience. Number one, I loved that, genuine and the authenticity, because like you said, that scales and you can't fake that. So who you're surrounded by from the team perspective is really important. Know the people in the room. I love that. I hear that, but you guys framed it really well, especially said around, we know our target customer so well and that profile so well, but, knowing the investors in the room and sort of showcasing also that you took the time to understand like what they invest in and who they are is really important. And then, back to Zaw's point too, just sort of framing that problem and what you're solving, especially in an early stage, to know that, to convey that you understand the market. And lastly, advisors. I think this is all like really, really valuable for everybody. So I'll change gears then. What are some of the common missteps that you've seen founders make in the funding, process? Whether that's someone that has come and sat at your table, or that you're mentoring, or that you're advising, because sometimes you have a little bit of that look behind the curtain. And what do you think others can learn on the phone here from this so that they can set themselves up for success and really not make those common mistakes?
I'm happy to start. If that's okay, it's fine. I will say what I've seen that has not worked well for me, and then it's not worked well for other people specifically, as I've met these founders, is number one, don't be sensitive, right? Like if an investor tells you that they don't get your market, or they don't quite see the value prop in what you're presenting, it's okay, right? Either convince them, it's your job, or move on to the next person. But don't take it personally, and definitely don't get into a combative, contentious situation. So that's number one. Number two, know your valuation, right? When you're pre-product, pre-revenue, pre-money, don't put your valuation so high, like it's say $300 million, that it's unbelievable and you price yourself out of any kind of money that you might be raising. So I think knowing your market, knowing your valuation, being confident but not arrogant. I think those are very important things. And I've dealt with those, firsthand, and I find them to be huge turnoffs.
Yeah, I would. So just to add to that, I would say a couple of things. I would say come prepared to answer a few questions. And those questions might be, what are you looking for in an investor? And so back to Shelley's point, thinking about that relevant capital, thinking about why whoever you're pitching is relevant to that conversation is not just money, is I think something that people are always looking for. I would say on not the negative side, but if someone tells you no, I think you have to respect that opinion, but I would always ask for feedback and always seek to do continuous improvement. We've had plenty of examples of people where we've said, no, this isn't quite the right fit today, or we don't have the same conviction that you might have about a market, but we're willing to be proven wrong and willing to continue to chat and meet with you. And so when you come back, hopefully you come back and you take that feedback, make sure you've incorporated it in and talk about, what you've learned, in the past 6 months or past year or whatever it might be. And then I would also say, don't be afraid to say, I don't know. If someone asks you a question, the worst thing that I always hear is when someone gives a line of BS on the spot when we ask a question that maybe they shouldn't know. And sometimes investors are known, and I'm probably guilty of this myself, to throw out kind of out of left field questions just to see how someone will react to them and to understand whether they have the confidence to say, look, that's a great question. Honestly, we don't know at this point, and that's part of what we're going to be proving out with this money. I think it's entirely acceptable to say that.
I think the most common mistake that I see is that people don't actually build an audience and test the audience in advance. I know I kind of already alluded to that. They go off of this is how many, I don't know, wearables were sold in the last year, or this is how many designer travel items were sold in the last year, as a basis of why it's a smart investment. But when they get ready to launch a crowdfunding campaign, they haven't really taken the time to see if customers really want to buy what they're selling. And that's actually peel the mask, what a lot of people don't expect when they're crowdfunding. Customers have thoughts and feelings, and they're going to be really, critical, even more so than VCs. So they might even start Facebook groups about how they think that your product is a bad idea and encourage all of your backers to join it. I've seen it. So go and talk to people and see if they like the idea. Don't put something in the world that, you're not comfortable with, your mother, your maker, the media, or your mentor being comfortable seeing out there, and talk to people in the street. I swear, I think it's actually a really good lesson.
I love that. I mean, it's like Shelley said, if you're not going to take something personal, and people are now creating Facebook groups about how they don't like your product, that maybe you should have sort of done that customer validation.
You want them to be making Facebook groups about how great of a brilliant thinker you are. I've seen that too. It's it's possible. You just kind of need to lay the groundwork.
So it sounds like in crowdfunding, I mean, that momentum of capturing the customer early on and really understanding and validating those needs is pretty critical. And I'm sure investors, Zaw and Shelley, I'm sure you guys want to know, have you talked to customers? Have you validated? It sounds like that is definitely something with early stage capital. Hopefully you've talked to and validated the idea beyond the market.
Yeah, my favorite thing to hear, not my favorite thing to hear, sorry, I shouldn't say that. But one of the best things you can hear in those scenarios is to have someone come in and say, look, I spent whatever it is, X months, 3 months talking to 50 potential customers and getting their feedback and validation before we actually went out and even built a product. And maybe they don't even have a product today, but that confidence of understanding their market and those customers, whether they be consumers or whether they be businesses or enterprises, is, I think, critical, no matter what you're doing. And a lot of times when we're doing our diligence, we'll pick up the phone and call people and say, okay, what do you think of this? What's your opinion? And we've been known to go on to Facebook groups for consumer companies as well to Sarah's point, and pick out, and talk to people that were maybe early users of a product and understand like what they like or what they don't like. Not everyone has to have a net promoter score. Net promoter score is basically an understanding of, how likely your customers are to recommend you. But when we see NPS scores or net promoter scores that are very high, obviously that's a great sign of validation for the company.
I love
Great.
that. Talk to people on the street. I think that's awesome.
Great. So, okay, another question for all of you. Do you have kind of a brief story that you can share about a founder reaching out, getting your attention? I know that sort of warm introduction is preferred and obviously gets your attention at the top of the inbox quicker. But I do think the access, as Shelley even said, that access to networks is sometimes coastal, is sometimes just that, sort of access that you have based on, your 1-2 degree community of, professionals. So if there is any advice that you have for someone to get your attention or even just establish that rapport, so maybe not ask for the meeting right away. If you have a story, where there's that exception that someone can hope for or shoot for, I'd love you guys to share it. And Sarah, I have a different question and it framed for you on this, so I'll go to Shelley and Zaw.
I totally have an answer to this, though.
Oh, great.
Go ahead.
So I think one of the most interesting things, I'm in the reverse position. I want to talk to as many people as possible. I'm not really as, I don't know. I want to find all of the cool new things and I want to help them launch because I feel like everyone can and should. But I think a lot of people don't realize that I have friends who are VCs and that they're trying to get meetings with, and they may like miss a phone call with me or miss like a couple phone calls in a row, but they're like very prim and proper and totally prepared for all of the calls with the VCs. So I just like to remind people that like a lot of the people in this space talk, and you can't just like wear this personality, going back to the being authentic. You can't, it is very telling for me when someone's like really, really ready for a call and they've sent me the deck in advance and they have all these questions, they've done their research about the platform, because that means that they are kind of approaching everything with that attitude, where that's not always the case. I think sometimes people think crowdfunding is like the lesser form of financing, so they don't necessarily need to show their best face. But I would encourage people to think the opposite.
I think that's true, by the way, Sarah, in all walks of life, right? Like it's such a small world and you just never know who's going to connect you to who. And you have to always be your best self, and you don't know how people are going to turn out to be helpful to you. I've learned that, I've seen that, I've done it. And I think that's really critical. And what I would say is, how do people the question is, how does someone get your attention through a cold email? Is that right? I think, so recently I had an experience where someone sent me an email, really thoughtful, like super thoughtful. Like I could tell that she put a lot of time into it. She quoted me from one of my speaking engagements and she used one of my best, like my favorite quotes, and she put that in there. And I was so touched by that. And I responded to her because number one, you always want to be seen as responsive. My number one goal is to find the best deal for you. So I want that. And it's not always possible to respond to cold emails, but a thoughtful email, a personal email will go a long way.
I don't know if I have any hopeful stories to share on that end. I think it's for me, it's always, best to do through an introduction. I will say that if you see an investor or find an investor that you really want to work with, and they're not responding to a cold email, find out where they're speaking, if they're speaking at a conference or if they're going to be at an appearance somewhere. And don't be afraid to go up and talk to them, because yes, there's a lot of people. There's always a line of folks kind of waiting to talk to investors. But if you can be short and succinct and kind of get your point across and say, I'd love to follow up with you, and get them interested in the idea, I think that's another great way to be able to actually meet someone in person, as opposed to just it being a not very personable, or, maybe in Shelley's case, a very personable email that's sitting in the inbox, which, there's, thousands upon thousands of those, unfortunately.
I love that, because then you can follow up and say, I met you.
Yes.
We talked briefly. So
Exactly.
It's not exactly cold. It's a little bit
That's right.
warm, a little bit more qualified, but great points all around, I think.
More thing.
Yeah, go ahead, Sarah.
I was going to say too, I love when people just have great video content that's been online, and people have been kind of like seeding it out there before they have those conversations, or before they send those emails, because you might actually find yourself like the person receiving the emails. I think focusing on creating cool content, putting it out there, is really one of the best ways to go, because it gives you recognition.
Right. I love that. So the conversation kind of around funding and bringing more diverse founders to the table has definitely been accelerating. We're seeing this with a number of organizations, a number of, funding sources really capitalizing, like Chatter Fund, for example, on this pledge to support, minorities, vets, women, et cetera, because we know that we'll be more successful as a community and just as a world with more diverse founders. So in 2 sentences, I'd love to kind of just capture, what's your hope for this inclusivity, in people getting funded and just creating great companies? And do you have any thoughts on just a better solution or something that we can all think about and do?
Well, I think it's a tricky thing to be able to tackle, because there are so many different parts of the ecosystem, and so many different people are trying to help support it in different ways, whether that's creating more access to capital, whether that's creating more opportunities for kind of STEM education, whether that's opening up more, diverse investors that can look at more diverse set of entrepreneur groups. I'm personally a big fan of kind of what if you ever read Malcolm Gladwell, of what the New York Philharmonic did. I'd love if we could ever get to a point, I don't think it's probably possible, but where, auditions could be done blind behind a screen. And so you're just evaluating a company based on its merits and based on the qualities of a team, and not actually, seeing their gender, their race, or anything else. I think we got a long ways to go before we can probably get there. But I know there's people that are obviously like Shelley and others that are working really hard at that. And so that's great to see.
I love that.
I will add, and those are all really awesome points, Zaw. I would add to that, when I said earlier, I'm looking to build a good old girls network, I want to clarify that network includes men. So I think that it is really critical that in this world that I want to see women have access to capital and networks, that includes men who will mentor them. It should be a place where men who shatter and women who shatter can come together to scale these companies, because I don't think any one entity can do it alone. And on top of that, I think what you're saying, Zaw, is really important as well, where I just think that we won't see the change that I'm looking to make. I know it's not going to be in my generation, but I do have a 10-and-a-half-year-old daughter, and I'm hoping it will be set for her generation. So I'm very realistic about it, but the work has to start now.
And one of the things I would add that I love about Indiegogo and other crowdfunding platforms is that it's not even necessarily about the team in that situation. Like half the time, I don't even know if I ever see a picture of the actual people that are behind it, but what I'm looking at is just the product. And so maybe that's the real first evolution in kind of this blind audition process. And Sarah, you probably, I don't know how much
I think you totally stole my point, but you said it way better than I was going to say it. So. I'm most excited for the types of technologies becoming available, and the like self-starters that are just making their own videos, making their own graphics, doing a lot more in-house, and producing really quality pages and products. I'm just excited to see how that can kind of be like more of a reality and kind of scaled more for all campaigners. And I'm excited about equity crowdfunding, which I think is going to be a big deal. We're opening up our program more and more and more over time. So I think that that's going to eventually be one of the main ways that people who maybe don't have their product ready to ship will be able to still raise funds without kind of participating in the like classic story of crowdfunding where maybe they went a little too early and they have the delayed timeline. I think we can fix that, and I'm really excited about that.
Awesome. So I'm going to actually switch to questions, and it's yes, please, Shelly, go ahead.
I think this is really important to note that so when we were talking, you're basically Zaw's talking about debiasing, right? In the founder process and pitching process. I think that there is another aspect that's really important, and that's from the hiring standpoint. So, not as many women are hired into tech positions, and that's also where the missing women are in the tech industry. And so to that point, there's something called the Marco Foundation, and I'm on their Rework America Task Force. And our number one goal is to figure out how do we bring debiasing policies and practices to companies where they're doing this, but from a hiring standpoint, where they can evaluate people without worrying about, without looking at their race, without looking at their gender, using AI. And then at some point you have the human intervention aspect of it and working at the state level down to and partnering with companies. So I did just want to make that point that it's as important in the products that are pitched and in the hiring process as well to get more women and minorities into the tech industry.
That's great. Shelly, can you share that website?
I will, yes. Let me pull it up really quickly.
Okay. So back to actually, Sarah, what you were talking about, we got an anonymous attendee question that said, I just learned about equity crowdfunding. Can Sarah tell us a little more about that and if she recommends it? So Sarah, do you want to share? Oh, you're on mute, Sarah.
Better?
Perfect.
Good. Okay. I'm really excited about it. I encourage maybe if you want to look for an example campaign, we had a campaign raise over 1.5 million. It's called Unlimited Tomorrow for like people missing limbs. So it's like new haptic prosthetics. And it's this wonderful kid, the kind of like wonderkind that makes you like kind of like wonder what you did with all the time out of Colorado. And just a heartwarming story, new possibilities. But equity at Indiegogo, we started actually around the time that I started at Indiegogo before leaving my agency where I was running campaigns. And so it's been around for about 1.5 years. It's a joint venture with Micro Ventures. We've had all of our campaigners meet their minimum raise at this point. So everyone's kind of met that first threshold. And we've had, many successful, 6 and 7 figure campaigns in that time. I think it's been about around 20 campaigns that have launched. Very exciting. And we're happy to tell more information. People can feel free to email me, or they can check out the equity page on Indiegogo. I think it's just right in the explore bar.
Awesome. Okay, great. So as a female entrepreneur in the tech space and also with a purpose-driven mission, are there any top angel or VC funds that come to mind that would be a really good fit for that?
Well, I would hope all of them. I don't know if we're exactly there yet, but I think I try and look at it as with no gender attached to it. Obviously, there's funds like Shatter and others that are focused on female entrepreneurs that are fantastic. But I think there's an opportunity for any purpose-driven company with a great entrepreneur to go and raise capital. I don't know if I would have just one specific fund in mind.
Anyone else?
I just want to note, I think Indiegogo, when it was looking for investors, was turned down like 96 times. Now we've been around for 10 years. We've raised over $1.5 billion. I think don't let people saying no, maybe even up to 94 times, discourage you. Maybe there's not that perfect one or two, but when you get to 94, 95, 96, you're going to be in luck.
100 is the sweet spot, right? Okay, great. And then for Shelley, if checking out sort of the team, for instance, is number one, right? Or, up there on your list. Love to know just advice on when you have advised some of these companies and they're saying like, how do I find that team? How do I find sort of the yin to my yang as a co-founder, or because I have a limited network, like how do I build that network to really grow my diverse team that I would like to? Do you have any recommendations of, the portfolio companies that you work with, how they really found their great team members?
So what I will say to that is, we were discussing this. I was at an investor dinner last night, and we were talking about how, finding that perfect co-founder and that partner is truly like a marriage. It's like you have to date, right? You have to first find the person, then you have to date, then you have to, kind of work into the relationship. What I would say is, don't rush into it. It is probably one of the hardest and toughest decisions you'll make. So finding that person it's not hard, but it's definitely something that should be done very carefully. And what I'll also say is, don't limit yourself. Don't say, I'm looking for my co-founder. Don't say, I'm looking for this, I'm looking for my next partner. Say, I'm looking for someone great. I'm looking for someone great who fits these skill sets. Maybe I'm doing X. I'd love to find someone who can do Y and bring it together. Don't limit yourself by titles is the one thing. And as for expanding your network, I think that is truly about like what we're doing now, reaching out to people, talking to people, letting them know you're out there. It's not going to happen sitting in your office or in your apartment. You have to be out there and put yourself out there. So that's really important.
That's great. So I have sort of a specific question from one of the guests, and they say that they're struggling with their business. So kind of paying down on loans, struggled to get banks and angels to really speak with them. It's a subscription box business. It's sort of an all-in-one box. So with a 9-to-5 contract that was shut down, like any advice for, companies that are in this position where they've, come so far, they've built their business, they have a working product, but they're maybe at that phase where they're like, what next?
So they're lacking capital is what you're saying? Like
lacking capital.
You can't scale.
Yeah, it sounds like a pivot. So any ideas there?
Maybe a really strong affiliate program, like an initial buy-in and, people can get 15% of sales, something more grassroots, more Mary Kay, at least for starters, maybe to help boost some of the sales numbers that they need to maybe reopen some of the conversations with people who are kind of ghosting them a little bit. More community.
Yeah, I would say, if you think about the subscription business overall, it's one where you can get a lot of value up front from someone actually paying for it. And so finding those scrappy ways to basically go out and get customers and get your, your unit economics to the point where you're actually making money on someone all the way up front. I mean, that whether that's affiliate, which is a great idea, or other stuff for social or anything else that it kind of takes. Because I think once you then build that momentum over time, and especially if you have, if there's no one out there in the community that is resonating with why they should give you money today, banks are notoriously hard for this kind of thing anyway. Then you got to buy your own breathing room sometimes.
Yeah, I'll say too, from the panel that we had on monetization, some of the advice was, corporate partners and potentially even like one specific paid partner that you sort of customize a solution around, whether that's a pivot or not. And I don't know if that necessarily applies to the subscription box mentality, but when you think about the products that are in the box, you also have to make sure that you're leveraging those communities, because each of the products, they have a following and they have a network. And so hopefully you can sort of scale that, consumer base a little bit further, faster. And that came up a lot on monetization call, was sort of these B2C models. Okay, so I'm going to go to another quick question. Speaking of different methods of raising, where would you recommend what is a better fit? Crowdfunding, traditional VC, or bank lending? So kind of like what business model, or what are the drawbacks or advantages to either based on a business model or stage?
I guess I would say that they're not all like mutually exclusive. Though you may not be ready for getting investment or getting a bank loan or crowdfunding. Crowdfunding is a really big term and it means a lot. And there's like Patreon is a really cool program where you can have people give you basically like a monthly stipend if they believe in your cause. You could do Kiva. It's kind of funny, like encouraging people to look at other platforms. But I want people, when they're really going to sell the product, to be ready to sell the product. And that's kind of what Indiegogo represents. So maybe you're not at a stage where you're ready to launch a successful Indiegogo campaign. But that doesn't mean that crowdfunding is a completely closed door to you. So reaching out to someone like me and asking them about alternatives is absolutely an option for you.
And what about industry, Sarah, for crowdfunding? Do you see more success in one category versus another?
Yes, we've started leaning really into the like the tech, design, and hardware category, mainly because Indiegogo is based in Silicon Valley. When they launched, it was more documentary films and more like independent projects. But the people in the immediate surroundings of where Indiegogo was, helmed, was, they were interested in launching startup businesses, gadgets, and that's what our customers wanted as well. So I would say that's really where our sweet spot is. But I am a persistent believer that if you have an audience built before your campaign, and here's some quick maths for crowdfunding people, if you have an audience that's large enough that at a 1 to 5% conversion rate, at your pricing or your pricing range, you can hit your initial goal. You're ready to launch a crowdfunding campaign. It doesn't really matter if it's a gadget or not, or if it's hardware or design or whatever. Like, you have that audience, you can launch that campaign. And then, to use one of my favorite analogies, which is very timely for me, the rest of the crowdfunding backers on Indiegogo, they need to see a critical mass anyways. So it's like the dance floor at a wedding. They need to see 30% or more on that dance floor before they're really willing to get up on there. So if you've done the heavy lifting of getting your audience ready before a campaign launch, and you're going to hit your goal, you're going to hit the stars, because the community on Indiegogo will see that, and they really, really respond well to that.
Great. Anyone else on thoughts? Okay, so I have a question here. This might be cards on the table, so feel free to hold back. But what's the best way, or sort of what advice do you have when the founder is sitting at the table with the VC, or even like the non-VC, on negotiating the deal? So, for example, like, you're at that stage where you're potentially getting that funding. What are some of those negotiation tools that you think that everybody should have in their pocket? And is there anywhere they can even really go and learn those?
Well, first I would say congratulations, because if you're at that phase in the process, then you've got someone that believes in your business at that point. And I'm a believer that if someone wants to invest, you can always hopefully find the right vehicle to invest in. The traps that I would see there would be, don't get caught up on valuation. And valuation is just another way of saying, what percentage of your company are you willing to give away for X amount of money? My advice to founders is to never set the valuation up front, but just set the amount of money that you want to raise and be willing to understand, what that money is going to be used for, and then also what percentage of the company that you're typically going to give up. There's different ways, obviously, of going about funding, from a venture standpoint, whether that's through traditional equity, where you're basically selling that stock up front, or whether it's through what's called a convertible note, or safe note is very popular these days, where, they're giving you the money, but you're not necessarily setting valuation to date. But there's maybe a cap or a discount, or kind of the two key terms. So I would just come prepared to understand, what that investor typically invests in that negotiation. Are they typically investing in companies in a $10 million valuation range, or are they comfortable investing $200K, $500K, $1 million, $2 million? But just understanding your audience before you go into that negotiation is, I think, really important.
Anything to add, Shelly?
I think know when you're willing to walk away. And I know that sounds kind of hard, right? Like Zaw said, congrats, you've made it this far and you're at the table. That's wonderful. You want to make it work, but know when to walk away as well. And that goes for the investor and that goes for the company.
Great. So another question that came in, like Scoop in your portfolio, Zaw, and just, broadly across the board, Sarah, this probably less applies to crowdfunding, but if it does chime in, when someone has similar or like products in their portfolio, is this a positive? Is this a negative? Should you be wary of sharing this idea? Is there a way to, sort of create partnerships? How do you look at those kind of pitches?
Yeah, I would say if there's a directly competitive product in the fund's portfolio, I would hope that fund would let you know up front if you didn't know for some reason, because those things, people are only as good as their word, right? And so, obviously you're probably not going to get an investment, nor should you go talk to that VC if there's a direct competitor in their portfolio. Sometimes there arise situations, though, especially where we invest, things are so early that things are bound to change, and companies will pivot and change into certain things. And so we've certainly seen examples where, two of our companies are, looking at the same potential market 5 years from now, but they're not in there today. And we just have to be willing to accept that as investors and keep a Chinese wall between those two companies. From a complementary standpoint, if there are companies that are, potential partners, I think those are great. And so understanding what those are, and maybe, sometimes looking for validation within our own portfolio that this is someone that they would want to partner with is actually a part of the diligence that we would do before an investment. But I will say on the specific to Scoop, if you are a company that is trying to build a carpooling platform for commuting for big enterprises, we'll gently tell you up front that we already have something that we're doing there.
Yeah, they said, would it look at a company, commuter carpool, but maybe rideshare idea?
We would probably respectfully pass on that meeting.
Good to know. Good to know. I like that someone's just going for it here too.
That's good. No wrong with that.
Okay. So any last minute advice, in the last 2 minutes that we have, any sort of last closing thoughts for everybody here? Because this has just been so valuable. I think we've hit a lot of great key points, and I've taken some good notes too. So I'd just love to hear if there's anything that you want to share.
I want to say one last thing and go back to Sarah, where she said, it's a small community. People know each other, they talk to each other. I think with that in mind, operate with integrity. Come to any deal that you're working on with good intentions and integrity. And I can't tell you how I've seen it the opposite. And it's always surprising to me that people don't think people talk, or, word's not going to get around. So just know that you are responsible for your word and your reputation.
Agreed. Okay, great. And Shelly, did you want to share the Markle Foundation?
I do.
Okay. You can just say it online, and
it's, so I don't know how much it'll tell you, but it's on www.markle, markle.org /rework.
Okay, great.
America.
So that was back to the goal of kind of this lobby and, kind of do policy around this diversity and that we discussed. Awesome. Okay, great. And so for everyone else, we're going to close up here, but what we did do on helloalice.com was create a great collection for those of you who want to learn just a little bit more, dig a little bit deeper, get online and sort of do investigation around, what types of capital, debt, and equity there are, what types of pitches, what advice is out there. So around, the gamut in terms of crowdfunding in VC, we really want to help create resources that are accessible to all and, help you kind of take away something not only from this, but that you can dig into online right away and hopefully get some tips. And I hope this has been really valuable. I just want to, again, thank the panelists, Shelley, Zaw, Sarah, so much for joining, and congratulate Sarah on becoming an aunt while we were on the phone.
Wow, congratulations.
I just got the text message. It's like a new baby nephew. I'm an aunt, officially.
Hooray.
Kept it together, guys. I kept it together. I can't guarantee when I get off of this call, though.
So good celebration. Good celebrations. Thank you all so much.
Thank you.
Thanks, guys.
Bye-bye.